Hello everyone, welcome to Zelestar Weekly Market Update. Today with me I have Amir and Samir.
Amir and Samir, this sounds like the sun on the moon, like gold and US 30. Actually, this is like the favorite assets we trade. Alright, so speaking about financial markets, things were going pretty smoothly until the end of this trading week. We had a spike in gold. That's because of negative reports that came on DXY that affected also NASDAQ, EURUSD, and pretty much all the markets. But technically, markets are looking pretty nicely right now, and they've been compelling to market structures just as we expected it to. And we'll hop into that in a second.
Although we got better than expected results from the corporate earnings in the United States, in contrast, NFP and job opening numbers released dramatically lower than expected, and it increased the probability of rate cuts for 2025. Now market participants are expecting 2 complete rate cuts for September and December of 2025.
All right, everyone, here we are starting off our weekly market updates with Bitcoin. Now, as you can see, market is compelling to the analysis we've been speaking about for the past fortnight, 2 weeks. And same as it is, we got a breakdown below the support level, and we can see Bitcoin is falling. We can still expect a further continuation, this crash till, well, let's call it retracement rather than crash, till the levels of 110,000. And from there, we can see either a retracement or a possible continuation to the upside. We will see what's happening fundamentally and technically by that time and decide which bias we're going to be taking. All right, so that will be it for Bitcoin, a continuation to the same analysis we've been speaking about. And here we are shifting into gold outlook for the upcoming week. All right, gold charts look a little bit tricky, not gonna lie. So we have gold in the middle of support and resistance, right? And we can see that gold has broken below, changing the color here so we can be more, below the trend line that in the previous ascending channel, and it made a break and retest. So according to trend, let's say, or market structure, we can see that market is now at a resistance, and from here we can expect gold to further continue pushing down. However, according to market language, we are also seeing some pretty strong bullish momentum coming from this level. So if we are looking for any short entries by this resistance, we want to be adhering risk management, compelling to strict rules, because it will probably be a risky entry to go bearish from here because of the bullish momentum on gold. Yeah, in a third perspective, we could see on a bigger picture that gold is still in the middle of the supply and demand on a higher time frame. So that will be it for our outlook on gold, and here we are shifting to NASDAQ. Now, looking at NASDAQ, as we've anticipated, market fell from the trend line all the way down, and we can still expect a further fall for the NASDAQ to retrace the trend line of this ascending channel before a possible continuation to the upside. So this is about NASDAQ. Nifty50. Now, as you can see, Nifty50 has moved to the support level as we have anticipated in the previous week, and we can expect Nifty50 now to make a retracement to resistance of 25,000 in the upcoming week. So that'll be it about Nifty50, and we're going to EURUSD. Looking at EURUSD, after the negative reports on the United States dollar, we can see that EURUSD has made some pretty impulsive bullish momentum from the support level here, and we can expect EURUSD to continue moving up, possibly reaching to the resistance of the levels of 1.1700s, or a possible continuation to the high resistance of 1.1800s. So this is about EURUSD for the upcoming week, and if you have any questions about anything, feel free to drop it down in the comments and we'll get back to you on it.
Hello everyone, welcome back. This is Amir Amidian, Senior Fundamental Analyst at Xylos, the head office located in Dubai. and today we are going to talk about the most vital aspect of financial markets, which is fundamental. Stay with me. Last week was very crowded. We got several economic indicators from different regions, especially in the United States, because the main concentration was in the United States. Last week, as you can see here, we got JOLTS or job opening numbers. It dramatically dropped from the previous period, and later we got NFP, or better say non-farm payrolls. It clearly showed a weakness in the labor market in the United States. And by the way, we got different economic indicators such as GDP for the advanced version. It released way better than expected, and also FOMC meeting, which they decided to not cut the interest rate. As usual, I want to kick it with the last week economic indicators. Last week we saw a dark image from the labor market in the United States as JOLTS and NFP dropped dramatically. US JOLTS fell to 7.43 million in June, signaling weakening labor demand, while July NFP added just 73k jobs, far below forecast, with big downward revision to previous months. Unemployment rose to 4.2%, fueling Fed rate cut expectations amid rising stagflation concerns. But on the other hand, in contrast, ADP reported 104,000 private sector job gains, beating forecasts and rebounding from a June decline. Later we got the FOMC kept the rates steady at 4.25% to 4.5%, citing balance risk between inflation and slowing growth. Two Fed officials dissented, calling for a rate cut due to softening labor market signals. Chair Powell stressed a data-driven approach, saying no decision is made yet on the September cut, but labor conditions will weigh heavily. From the corporate earnings, Apple posted a stronger third quarter results with $94 billion revenue and 1.57 EPS, boosted by iPhone and services growth, but shares slipped on tariff risk and slow AI adoption. Meta, the other company, surged 11% after beating estimates with a strong AI-driven ad growth, while Microsoft topped forecast on cloud and AI strength. Eventually, Amazon beat on second quarter earnings but dropped 8% due to cautious third quarter guidance and rising costs. For the upcoming week, the attention of market participants will be centered on MPC, or better say UK Central Bank, which they are gonna decide about the interest rate, whether they want to cut or not. And by the way, we are going to get some economic indicators from the Canadian dollar, such as employment change and unemployment rate, and ISM services PMI from the United States. Don't forget also about the corporate earnings for the upcoming week, as we are going to get some giant companies earning latest updates such as Palantir, AMD, Pfizer, Caterpillar, Uber, Shopify, Walt Disney, and McDonald's plus Eli Lilly. So stay tuned. See you next week.
Thank you for watching us. Make sure that you leave your comments, like, and don't forget to share with your friends.